Home prices are ticking lower as the end of year approaches. The low point of prices each year is the second week of January. Will that be the case this year? That'll be interesting to watch. It'll be a real signal if home prices keep falling after January 15th. As we've been saying, it probably depends on where interest rates are at that moment, but rates have settled in the sixes, and we've been observing that about 5.5 is probably a significant threshold for affordability for American homebuyers. So we'll keep watching all this data to report what happens next, especially in that middle of January week. Every week, of course, Altos Research tracks every home for sale in the country. We analyze all the pricing, all the supply and demand, and all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos Research market reports with your clients, your buyers and sellers, now might be the time to step up. Go to altosresearch.com and book a free consult with our team. Because everyone is worried about what's happening right now in the market. They need you to help them see clearly. The data we cover here in these weekly videos is national, and it's available for every zip code in the U.S. So join us to dive in. I'm Mike Simonsen. I'm the founder of Altos Research, and here's what the data looks like for the second week of December 2022. Available inventory of homes for sale right now in the U.S. is 535,000 single-family homes. That's down 2.5% from last week. These weeks between Thanksgiving and the New Year's holiday are always when inventory falls most rapidly, of course. This week's decline was slightly more than our very conservative model had predicted. And as some homes are selling, some are being withdrawn, and there's very few new supply coming to the market. So the decline in inventory is being accelerated by slightly lower mortgage rates lower than that absolute freeze-out period of September and October, when rates were above 7%. At the far right end of this chart, you can see how inventory bumped up during that period and is now resuming a slightly lower normal down curve for the season. Unsold inventory of homes on the market is 58% higher than last year at this time when we were at record lows. We're down 7% off the peak, this year's peak in October. So that's starting to be significant. And we still have 36% fewer homes on the market now than we did at this time in 2019, pre-pandemic. The difference between now and 2019 actually hasn't changed much the last couple of weeks, staying at about 36% fewer, which implies that we're on the same seasonal trend as we were pre-pandemic. One signal to watch after the new year is whether we keep closing the gap in homes for sale between now and those pre-pandemic normal levels. If rates move higher, buyers will cool again and inventory will climb. We will spend more time on the forecast for inventory for the coming year in this Thursday, the hour-long Altos Research webinar. There are tons of signals in the current data to help us interpret what's happening for 2023. So we're going to spend the hour diving into them all. We'll look at those data and a lot of local stuff as well. So to reserve your spot in the webinar, there's a link in the description below. Click that to save your spot. These attendance is limited to 1,000 people in these calls, and we have way more than that sign up each month. So register now, save your spot, and then show up right up at 10 a.m. Pacific to get in. That's Thursday. Link below. So even though demand has cooled way down, supply continues to be incredibly restrained also. This week had fewer than 50,000 new single-family listings, a handful of which still sell immediately, only a little handful. Those new listings that sold immediately, that's the light portion in each bar in this chart. So you can see at the far right end of the chart, the little rebound after the Thanksgiving holiday, but it's still 28% less new supply than last year at this time. Last year's inventory was low because Americans, still living in that sub 3% mortgage rate, they were buying everything they could with that bargain they knew they had. So the psychology is totally flipped now, and it's sellers that are holding back. We have 4 more weeks of pretty rapidly declining new listings, and then that first upturn in the second week of January. The total pendings count is now 35% fewer than last year at this time. So that's the total number of homes in contract. They're no longer listed. They've taken offers, but they're not yet sold. So 35% fewer than last year at this time. I think that's the real story in the data right now. We can see how few new transactions are getting started and how few are in the pipeline to complete. In this chart, the light portion of the bar are the new pendings each week, those that went into contract. And you can see the bar getting shorter and the light portion shrinking. So we have 5.7% fewer homes in contract than just last week. So some are selling, some are falling out of contract. These numbers always fall over the holidays, but you can see how, we have 35% fewer homes in contract now than last year at this time, 35% fewer pendings. This is a leading indicator for sales transactions that will close in January and February. So it's very slow. There's very little in the pipeline. The median price of single-family homes in the U.S. is marching lower each week, as we've already covered and obviously have been expecting. The median price of single-family homes in the U.S. now is $415,000. It should be right around $400K before prices turn up for the spring. So every year, home prices jump a little between that second and third week of January. Every year. It's very reliable. So if you want to test a bearish hypothesis, watch this moment. There are homes now preparing to list after the holidays. So essentially, they come in, we have a little new listings, and prices tick up that week. If this year they don't, that'd be a bearish signal to where buyers aren't ready to be now. So if prices continue to tick down between the second and third week of January, that'll be a really bearish signal. Frankly, I could imagine a world where prices don't jump that this coming January and that week. Price declines across the U.S. have so far been seasonal, but actually more than seasonal, especially in the bubbliest markets. So if buyers in Austin and Phoenix stay on the sidelines in January, maybe prices continue to inch down. So that's why I say it's a good idea to keep your eye on that second and third week of January. That's the moment to test your bearish hypothesis on the U.S. housing market. The price of the new listings rebounded this week. So this is totally normal after Thanksgiving. That's the light red line here. And it's why I'm still expecting home prices to tick up in January. This is like normal behavior here implies to me that the market isn't so far out of whack that home prices would keep marching lower in Q1. Remember that to have negative home price appreciation in 2023, like down year, we just have to have a less steep upslope in the first quarter. All the home price gains happen in the first and second quarter, so it just has to be less steep than last year to have negative overall change. So that's what I'm expecting. Not prices ticking down directly in Q1. Price reductions are also coming down this week, trying to act normal seasonality. So currently 42.1% of the homes on the market have had a price cut recently. No surprise that that's a lot more than recent years. You can see the dark red line here. Price reductions peaked with interest rates in November. They moved higher with rates in September as well. So this is a really useful signal for buyer demand. Rate spike, no bidders, I have to cut my price. rates ease, some sales happen. Maybe I'll hold off on my price cuts. So we'll probably end the year with about 40% of the market having had price reductions. This continues to ease lower in the first quarter because you have new inventory come on. It's good quality. It's priced right for today's expectations. And so we have fewer price cuts in the first quarter. Unless mortgage rates spike higher, then we'll see demand cool and price reductions ratchet up as well. So much to cover. Tons of detail in this week's Altos Research webinar. That's Thursday, December 15th at 10 a.m. Pacific. Click the link below to register. As I said, these are limited to 1,000 attendees. We have way more than that who want to join each month. So click that to reserve your spot now and then show up right at 10 a.m. on Thursday. That's all the data we have time for this week. Go to altosresearch.com and consult with our team. Book a consult with our team to learn how to interpret the local data for your market, for your people who need it most right now. They need you to be the expert. So I look forward to working with you more soon.